bring in Goldman Sachs research analyst Noah Poponak. Noah, it's great to have you on. Defense stocks in general tend to trade as a group. Didn't have a particularly great year this year. What do you expect in 2024?
Yeah, hi, Morgan. Thanks for having me on. Hope you had a good holiday and Happy New Year. You outlined the many geopolitical events that are occurring right now. One of the things we're thinking about with defense stocks is you had all that happening in 2023, yet, as you pointed out, defense stocks underperformed the market. So, with the hope that, cooler heads prevail in a lot of those situations and some of the major geopolitical events can be more likely to de-escalate than escalate as you move into 2024, 2025, that would potentially be less upward pressure on defense spending. You couple that with the battles in Washington over total U.S. government spending and debt. You have a debt ceiling deal that gives you a continuing resolution into the early part of 2024, and then you have to have that fight again. And you may have automatic spending cuts come into play. It's pretty hard for the defense budget growth rate to accelerate, and it's not hard at all for it to decelerate. Defense stocks, as you mentioned, the group valuations tend to trade together, and they're very highly correlated to that growth rate in the budget. So we see a higher probability of decelerating growth rates, potentially negative growth rates in the budget, and the valuations of the group are above the historical averages, and we therefore see more downside risk than upside risk in the group as a whole.
Okay, so when we talk about defense specifically, are there certain names you would buy here, or would you steer clear and focus on other areas within aerospace and defense, like business jets or commercial aerospace?
Yeah, so we're generally cautious on defense as a group. We have sell ratings on Lockheed, Northrop, L3Harris, Huntington Ingalls, sort of the bigger cap bellwethers in defense. We prefer commercial aerospace stocks, so we continue to recommend Boeing. We like a number of companies in their supply chain, Howmet, which makes hot parts in the engine, CAE, which has a dominant position in simulation and training, TransDigm, HEICO, really high quality aftermarket companies. You mentioned business jet. I think the business jet market remains underappreciated. We recommend Textron, Bombardier, Embraer there. There's pockets of things to do in defense, I think. There's some companies that have a defense business without being a true pure play defense company. We recommend Teledyne and Planet Labs in that vein. And then there's the government IT and services group. We like Booz Allen and Leidos. Government IT overall can be correlated to defense, but the budgets they sell into are growing faster, and they don't face some of the margin issues that the big cap defense companies face as well.
Okay. So whether it's on the defense side or whether it's on the commercial side, supply chain has been an issue. It's been a persistent issue for a number of years now. Is 2024 going to be the year that we step back and we go, okay, we saw supply chain normalization, stabilization? And if so, even if you have pressure on, say, the top line from potentially a lower defense budget, for example, if those supply chain situations can be normalized, does that mean that, at least from an earnings perspective, it could be better than expected?
Yeah, supply chain has been a challenge in this group for a surprisingly long time. When we speak to portfolio managers that look at the entire market and we talk about supply chain still being a challenge here, they sound surprised because in so many other end markets, that's largely been resolved. These are long cycle sectors and they're long manufacturing processes. And so there's some tail wagging the dog in the supply chain, and they're complex products with a lot of component providers. So it's proving to take longer to fix the supply chain. On the defense side, there's been a strange phenomenon where the defense budget authorization, what Congress allocates to the Pentagon, has been growing at a certain clip, and the Treasury outlays have actually been negative. And that seems potentially due to supply chain. And so you could have a short-term positive impact to defense from that, but I'd anticipate more valuation pressure as that authorization growth rate slows. And again, there's a margin headwind that I haven't discussed as much that's a challenge there. On the aerospace side, you have had the travel recovery. There's still more to go in the travel recovery, and then long-term air travel grows 2x GDP.
Okay.
There's been really strong demand for airplanes for Boeing and Airbus from the airlines, but the challenge has been supply chain has held Boeing and Airbus back from delivering the planes. That seems to finally be getting better. I do think 2024 will be the year where that really finally picks up a lot of steam, and Boeing and Airbus can get the output to meet that demand.